How to invest in dividend stocks. A comprehensive guide. Investing in dividend stocks can be a great way to generate a steady stream of passive income. Dividend stocks are shares of companies that pay out a portion of their profits to shareholders in the form of dividends. Dividends can be paid out on a quarterly or annual basis, depending on the company's policy. In this video, we will walk you through the process of investing in dividend stocks, including what to look for in a dividend-paying company, how to choose a dividend stock, and how to manage your dividend portfolio. So stick around, as you don't want to miss our top 5 dividend-paying stocks that we will cover in this video. Also, do subscribe to our channel for more investment-based content in the days to come. Let's begin. Why invest in dividend stocks? Investing in dividend stocks can provide several benefits, including 1. Passive income. Dividend stocks provide investors with a reliable source of passive income. As long as the company continues to pay dividends, investors can receive a steady stream of income without having to sell their shares. 2. Capital appreciation. In addition to generating income, dividend stocks can also appreciate in value over time. This means that investors can potentially earn a profit by selling their shares for a higher price than they paid for them. 3. Stability. Companies that pay dividends tend to be more stable than companies that do not. This is because they have a consistent source of income and are more likely to weather economic downturns. What to look for in a dividend-paying company? Before investing in a dividend-paying company, there are several factors to consider, including 1. Dividend yield. The dividend yield is the annual dividend payment divided by the stock price. This ratio can give you an idea of how much income you can expect to receive from your investment. 2. Payout ratio. The payout ratio is the percentage of earnings that a company pays out in dividends. A high payout ratio may indicate that the company is paying out more than it can afford, while a low payout ratio may indicate that the company is retaining earnings for future growth. 3. Dividend growth. Look for companies that have a history of increasing their dividends over time. This can indicate that the company is financially stable and has a long-term commitment to returning value to shareholders. 4. Financial health. It's important to evaluate the financial health of a company before investing in its stock. Look for companies with a strong balance sheet, low debt levels, and consistent profitability. How to choose a dividend stock. Once you have identified a company that meets your criteria for dividend investing, you can begin to choose a specific dividend stock to invest in. Here are some factors to consider when selecting a dividend stock. 1. Industry. Consider investing in dividend stocks that are in industries that you are familiar with and understand well. This can help you evaluate the company's prospects more effectively. 2. Company size. Small companies may offer higher dividend yields, but they can also be riskier than larger, more established companies. Consider investing in companies with a market capitalization of $10 billion or more. 3. Valuation. Evaluate the company's valuation by looking at its price-to-earnings ratio, PE ratio, and comparing it to industry peers. A low PE ratio may indicate that the stock is undervalued, while a high PE ratio may indicate that the stock is overvalued. 4. Diversification. It's important to diversify your dividend portfolio by investing in multiple companies across different industries. This can help reduce the overall risk of your portfolio. Managing your dividend portfolio. Once you have built a dividend portfolio, it's important to manage it effectively. Here are some tips for managing your dividend portfolio. 1. Reinvest dividends. Consider reinvesting your dividends to compound your returns over time. This can help your portfolio grow faster and increase your passive income. 2. Monitor company performance. Keep an eye on the financial performance of the companies in your portfolio. If a company's financial health deteriorates, it may be time to consider selling the stock. 3. Stay diversified. Continue to diversify your portfolio by adding new dividend-paying companies across different industries. This can help reduce the risk of your portfolio and increase your potential for long-term growth. 4. Evaluate your portfolio regularly. Regularly review your portfolio to ensure that it aligns with your investment goals and risk tolerance. You may need to adjust your portfolio over time as your goals and needs change. 5. Consider a dividend-focused fund. If you're new to investing in dividend stocks, or you don't have the time to research and manage individual stocks, consider investing in a dividend-focused mutual fund or exchange-traded fund, ETF. These funds invest in a diversified portfolio of dividend-paying stocks and can provide a low-cost, low-maintenance way to generate passive income. Top dividend-paying stocks in 2023. Now that you know the basics of investing in dividend stocks, let's take a look at some of the top dividend-paying stocks in 2023. 1. Apple Inc. AAPL. Apple is one of the largest and most valuable companies in the world, with a market capitalization of over $2 trillion. The company has an estimated dividend yield of 1.03%, a payout ratio of 22.7%, and has increased its dividend for 9 consecutive years. Apple has a strong financial position, with over $207 billion in cash and short-term investments as of the end of 2022. 2. Johnson & Johnson, J&J. Johnson & Johnson is a diversified healthcare company that operates in 3 segments: pharmaceuticals, medical devices, and consumer health. The company has an estimated dividend yield of 2.31%, a payout ratio of 53.6%, and has increased its dividend for 59 consecutive years. Johnson & Johnson has a strong balance sheet with over $20 billion in cash and short-term investments as of the end of 2022. 3. Procter & Gamble Company, PG. Procter & Gamble is a consumer goods company that produces and sells a wide range of household and personal care products. The company has an estimated dividend yield of 2.57%, a payout ratio of 63.5%, and has increased its dividend for 66 consecutive years. Procter & Gamble has a strong financial position, with over $10 billion in cash and short-term investments as of the end of 2022. 4. Microsoft Corporation, MSFT. Microsoft is a technology company that develops and sells software, hardware, and cloud services. The company has an estimated dividend yield of 0.86%, a payout ratio of 31.3%, and has increased its dividend for 16 consecutive years. Microsoft has a strong balance sheet, with over $175 billion in cash and short-term investments as of the end of 2022. 5. JP Morgan Chase & Co., JPM. JP Morgan Chase is a financial services company that provides a wide range of banking and financial products and services. The company has an estimated dividend yield of 2.27%, a payout ratio of 38.2%, and has increased its dividend for 10 consecutive years. JP Morgan Chase has a strong financial position, with over $606 billion in total assets as of the end of 2022. Conclusion. Investing in dividend-paying stocks can be a great way to generate passive income and grow your wealth over the long term. By following the tips outlined in this video, you can build a diversified portfolio of strong dividend-paying companies and earn reliable, steady income. It's important to keep in mind that investing always carries risk, and past performance does not guarantee future results. It's important to do your own research and seek the advice of a financial professional before making any investment decisions. With that said, the top dividend-paying stocks of 2023 offer attractive opportunities for investors looking to build a long-term, income-generating portfolio. Companies like Apple, Johnson & Johnson, Procter & Gamble, and others have a track record of strong financial performance and a commitment to returning value to shareholders through regular dividends. By following the principles of sound investing and carefully selecting dividend-paying stocks with strong fundamentals, you can achieve your financial goals and build the wealth and income you need for a secure future. Thank you for watching.